any allowance granted to the assessee either to meet his personal expenses at the place where the duty of his office. In medical terminology, the person who treats is called doctor and the person who is not feeling well is called patient. So if you are paying the tax to the government, that year is called assessment year, and the year which you earn the income, that year is called what? Previous year. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. Dear students, welcome to the very first session on the subject tax management with respect to unit 1, that is Introduction to Income Tax. The first thing is about Indian tax system and income tax law. Yes, Indian tax system and income tax law. We all know what is Indian tax system. So in Indian tax system, all the public are supposed to pay tax to the government. So you might question me why we are supposed to pay the tax. Yes, you have to pay the tax to the government because government have some expenditures, right? What are those expenditures? Paying salary to the employees, paying pension to the employees, or constructing of roads, constructing of dams, constructing of hospitals, right? So the government will be having so many expenditures. In order to meet that expenditures, government need money. So how they going to collect the money? They're going to collect the money, they're going to raise the fund through collecting the tax from the people or from the public. So taxation is the major instrument in the hands of modern governments to raise finance. Yes, to the modern government, taxation is an instrument to raise the finance to meet expenditures done on various public services. It is a compulsory obligation on the people and the payment of which is a legal duty of the citizens. Yes, it may be on their property. Yes, it is the obligation of the people or it is the obligation of the citizen of the country to pay the tax to the government. So why they have to pay the tax to the government? Because government will be having so many expenditures. In order to meet that expenditures, the government requires fund. So how they are going to raise the fund or collect the fund? Through collecting the income tax. Income, and even it may be required to pay at the time of manufacturing and selling or purchasing a commodity. Tax constitutes the major source of the government's income. Yes, public or the people are supposed to pay tax on their personal income. For example, if they are selling the property, on whatever the income they earn by selling the property, on that income also they are supposed to pay the tax. And as a manufacturer, if he is into any manufacturing activity, then he is also liable to pay the tax on manufacturing, selling and purchasing of a commodity. So if you are purchasing a commodity as a consumer, you are liable to pay the tax to the government. On your personal income, as well as whatever the products or the services you are going to receive, on that also you are supposed to pay the tax to the government. So now let us know the meaning of income or the definition of income. So the word income is described or explained under section 2 subsection 24. So the word income, it includes so many incomes. So which are those incomes? So profit and gains. So if you are earning any profit and gain, it is also called as income. Next, dividend. That means any dividend received is also called an income. And voluntary contributions received by a trust. Yes, if any voluntary contributions received by a trust. For example, I am a common man, I am a public. What I will do? I will go and deposit or contribute some money to the trust. So whatever the amount received by the trust, that amount is called what? Income to the trust. Next, any special allowance or benefits other than perquisites included under 4. Yes, any amount received other than perquisites is called income to a particular individual person. Next, any allowance granted to the assessee either to meet his personal expenses at the place where the duty of his office. Yes, any grant Any grant or the allowances granted to the assessee is also a income for that particular person. Next, the value of any benefit or perk visits obtained from a company. Yes, the value of any perk visits or benefits obtained by the company is also a income. So any kind of income earned by any individual or any person, individual person or by a company is considered as income. Whether he is winning from lottery or receiving the dividend, receiving the interest, receiving the salary, or selling the property and receiving the amount. So everything will be a income for individual person. So we don't have a proper definition, but the word income, it includes this many incomes. So moving further, definition of assessee. So what is assessee? So before getting to this word assessee, before know the meaning of the word assessee, let us take an example. If you take example of medical field, okay, if you are sick, what you will do? You go and consult a person, right? So what is that person is called? Doctor, right? You go and consult a doctor if you are not feeling well. Then what doctor will call you? He will not call you by your name, right? What he'll call you? He'll call you as patient, right? In medical terminology, the person who treats is called doctor, and the person who is not feeling well is called patient. For example, another example, in legal field, the person who gives the solution, for our problem is called lawyer, and the person who goes with the problem to the lawyer, that person is called what? Client, right? In marketing, terminology, if you are purchasing the product, what you are called? Yes, you are called a consumer or a customer, right? The person who is selling the product, what is called? He is called the seller or the shopkeeper, right? So in different sectors, they will be having the different terminologies. In the same way, in income tax also, we have different terminologies. You might have not heard about this different terminologies so far, but you have to learn this particular terminologies with reference to income tax, so that it will be very easy to you to understand the topics which comes under the subject income tax. So here, the word assessee, okay, the word assessee comes under section 2 subsection 7 of Income Tax Act 1961. So we all following the Income Tax Act of 1961, okay. So it comes under section 2 subsection 7. The word assessee refers to the person who is liable to pay the tax to the government. The person who is liable to pay tax to the government, or any other sum of money in the form of penalty or interest. That person is called assessee. Okay, I hope all of you got the meaning of the word assessee. Yes, any person who is liable to pay tax or any other sum of money in the form of penalty or interest, that person is called assessee. And the word assessee includes an individual, an HUF, that is Hindu undivided family, next a company, a firm, next association of person, body of individual, local authority, artificial juridical person. This all people comes under the word assessee. So assessee means the person who pay tax to the government are liable to pay tax in the form of penalty or interest, and who are all going to pay the tax to the government, those people are called assessee. So who are all going to pay the tax to the government? Individual, company, partnership firm, association of person, Hindu undivided family, these people are going to pay the tax. So these people are called assessee. Then the next terminology is person. So what is person? So the word person is explained under section 2 subsection 31 of Income Tax Act 1961. Okay, so the word person includes any individual, HUF, company, firm, association of person, body of individual, local authority, and artificial juridical persons. Yes, the word person, for whom we call person in income tax, The people who pay the tax to the government. Who are all going to pay the tax to the government? Yes, individual, HUF, company, firm, association of person, body of individual, and individual juridical persons. So definitely they are going to ask this terminologies in your main exam. So please concentrate more on these terminologies, that is assessee and person. So moving further, assessment year. So what is this assessment year? Assessment year, it's a period of 12 months. Assessment year is a period of 12 months starting from 1st April of every year, starting from 1st April of every year and ends with 31st March of next year. So assessment year is a period of 12 months. It is a year period of 12 months starting from 1st April and ends with 31st March of next year, and it is a year, assessment year is a year in which the previous year income is taxed. Okay, so it is a year in which the previous year income is taxed. That is called assessment year. Next one, previous year. So section 3, previous year. Again the same, it is a year consisting of 12 months, or it is a period of 12 months again starting from 1st April of every year and ends with 31st March of next year. So starts with 1st April of every year and ends with 31st March of next year, and it is a year in which the income is earned. Yes, it is a year in which the income is earned, that is called previous year. Okay, so if you are paying the tax to the government, that year is called assessment year, and the year which you earn the income, that year is called what? Previous year. Yes, moving further, gross total income. Yes, what is the meaning of gross total income? So gross total income is nothing but it is the sum of all the 5 heads of income. It is the sum of, that means the total of all the 5 heads of income is called gross total income. So which are those 5 heads we have under income tax? Yes, income from salary, house property, business and profession, capital gain and other sources. Yes, if you total all these 5 incomes, whatever the total you will get, that is called gross total income. Okay, so I hope all of you understood. So the total of all 5 heads of income is called gross total income. Then now, what is total income? What is total income? So total income is your gross income from all sources less certain deductions such as expenses, allowances and reliefs. Yes, so total of all the 5 heads of income is called gross total income. So after computing gross total income, we are going to give some deductions. So after giving the deductions, what is the balance you are going to get? That balance is called what? Total income. So moving further, exempted incomes under section 10. So the first one is agricultural income. Yes, any agricultural income received by an individual is exempted from tax. Why? To entertain the farmers, or to encourage, to entertain, to grow the crops, or to encourage the farmers to grow the crops. The government decided, or the tax authority decided, to give exemption on agricultural income. So any agricultural income received or earned by a particular farmer or by a particular individual person or by any person, it is exempted from tax. Then you need not to pay tax on agricultural income. Next, share of income from partnership firm. Yes, share of income from partnership firm is also exempted under section 10. So what is the share of income? So you are running a partnership company, you and your friend. So what you will do, whatever the tax, whatever the profit you are going to earn, whatever the profit you are going to earn through partnership firm, first you are going to pay the tax to the government. Later on, the balance profit will be divided between 2 partners. The balance profit will be divided between 2 partners. So whatever the profit distributed among 2 partners after paying the tax, on that profit there is no tax. So that's what the sentence says. share of income from partnership farm. Next one, share of HUF income. Yes, if you are into a Hindu undivided family, after paying the tax, if you are receiving a share from HUF, then it is also exempt under section 10. Next, any scholarship received. Yes, any scholarship received by students or by scholars, it is exempted under section 10. They need not to pay tax to the government. Next, income as dividend, section 10 subsection 34 and 35. Yes, income as dividend received by a individual person. This thing was exempted earlier, but now it is taxable. So I have written this particular sentence or particular point because you people might thinking that dividend received is exempted. Yes, it was exempted earlier, but now it is taxable. Next, capital gain on transfer of under section 64. So yes, we have a deduction under section 64. So any transfer of capital gain under section 64 is also exempt under section 10. Next, allowances of MP and MLA is also exempted under section 10. So there is no tax on allowances of MP and MLA. Next, pension to gallantry award winner. Yes, any pension to the gallantry award winners, it is also exempt under section 10. And capital gain on compulsory acquisition of urban agriculture land. Yes, capital gain on compulsory acquisition of urban land. So if you are receiving any income through the compulsory acquisition of urban land, so it is also exempt from tax. So these are all the exempted incomes under section 10, and in the exam they will be asking this question for 10 marks. So concentrate more on this because in exam they will be asking this question for 10 marks. They might ask you write the exempted incomes under section 10. So you are supposed to write this incomes. So moving further, residential status under section 6. So residential status is most important because without residential status you can't determine the residential status of an individual. You can't determine whether the income earned by an individual person is taxable or not. So to know the residential status, we have few conditions. So the tax liability of an individual in India depends upon the residential status in India for any particular financial year. Yes, the tax liability will be decided based upon the residential status of an individual. So the term residential status has been coined under the income tax laws of India and must not be confused with an individual citizenship of India. So an individual may be a citizen of India but may end up being a non-resident for a particular year, not for the whole year, not for the lifetime, for a particular year. Similarly, a foreign citizen may end up being a resident of India for income tax purpose for a particular year. Sometimes, yes, even though you are a resident of India, only for a particular period you are going to be a non-resident. Foreigner is in foreign, but for a particular year is going to be a resident of India, even though he is a non-resident. So it is based upon how he is going to satisfy the residential conditions. So which are those conditions we have under residential status? So before knowing the conditions for residential status, yes, mainly we have three types of residents. One is resident, not ordinary resident, and non-resident. So majorly we have three types of residents, that is resident, not ordinarily resident, and non-resident. To know whether the person is resident, not ordinarily resident, or non-resident, we are supposed to look into four conditions. So which are those four conditions? So first two basic conditions and the second two are called additional conditions. So first two are called basic condition and the second two are called additional condition. So basic condition. What is the first basic condition? Stay in India for 182 days or more. Yes. If any particular person, if any individual person stays in India for 182 days or more in the previous year. Yes. If any individual person stays in India for 182 days or more in the previous year and stay in India immediately 4 years preceding years is 365 days or more and 60 days or more in the relevant financial year. Yes, the first condition is 182 days or more in the previous year. The second basic condition is you should be in India for 365 days out of last 4 previous years. 365 days out of last 4 previous years and 60 days in the previous year, in the relevant financial year. Financial is nothing but the previous year. So the first condition 182 days or more during the previous year, and the second condition is 365 days or more during the last 4 previous years and 60 days in the previous year. So which are those additional conditions? So additional condition 1, has been a resident of India at least for 2 years out of 10 previous years. Yes, you should be a resident of India at least for 2 years out of 10 previous years. Second condition, he stayed in India at least for 730 days in 7 immediately preceding years. Yes, at least you should stay in India for 730 days out of last 7 previous years. So if any person is going to satisfy the conditions, okay, based on the satisfying level is going to be decided whether the person is the resident of India or not the resident of India. For example, if any individual person satisfies any one basic condition or both the condition and both additional condition, if any individual satisfies any one basic condition or both the basic condition as well as both the additional condition, is said to be ordinary resident of India. Is said to be ordinary resident of India. And next, if any person satisfies basic condition and fails to fulfill additional condition, if any person satisfies basic condition and fails to fulfill the additional condition, is said to be a not ordinary resident of India. Is said to be not ordinary resident of India. If in case any person fails to fulfill the basic condition itself, any person fails to fulfill the basic condition itself, then that person is said to be a non-resident of India. Okay, I hope all of you got the point how to find out the residential status. If any person fulfills any one basic condition and both the additional condition, is said to be a ordinary resident. Okay, if any person fulfills any basic condition and fails to fulfill additional condition, is said to be not ordinary resident. And if any person not fulfills the basic condition itself, is said to be not ordinary, is said to be non-resident of India. So next, moving further, so this is how we are going to divide the residential status: ordinary resident, not ordinary resident, non-resident. For example, here, how to compute the total income of an individual person. Income received in India. Okay, if you are receiving the income in India, okay, so it is a Indian income. Okay, it is a Indian income. So whether you are a resident, not ordinary resident or non-resident, if any income is received in India, it is taxable under all the 3 cases. Okay. Next, income deemed to be received in India. That means income deemed to be received in India. Income earned somewhere, but deemed to be received in India. That means it is going to be a Indian income and it is taxable under all 3 cases. Next, income accrues or arise in India. Yes, any income accrues, arise or generated in India, it is taxable under all 3 cases. If the value is 5,000, for example, income received in India 5,000. So in all the columns, what you are going to do? You are going to write 5,000. That's it. Okay. So if it is an Indian income, if the income is received in India or deemed to be received in India or generated, accrued, arised in India, it is taxable under all 3 residential heads. Next, income deemed to accrue or arise in India. Yes, income deemed to accrue or arise in India, again taxable, taxable, taxable. If it is 5,000, so 5,000 here, 5,000 here, 5,000 here. So this is how you are supposed to treat. Moving further, income accrues or arise outside India. So you are not earning the income in India, you are earning the income from outside India. So it is taxable, not taxable, not taxable. That means if you are earning the income outside India, for example 5,000 rupees you are earning. So here 5,000, here nil, nil. That's it. Next one, income accrues or arises outside India. Income accrues or arises outside India from business or profession controlled or set up in India. Yes, if any outside business is controlled from India, then it is taxable, taxable, not taxable. That means if the income is 5,000 rupees, so how we are going to treat? So 5,000 in the last case, that is non-resident case, it is nil. Okay. Any Indian income, it is taxable, taxable, taxable. Any income which is outside Indian income, it is taxable, not taxable, not taxable. Any outside business controlled from India, it is taxable, taxable, not taxable. So with this, I am going to end the session. So I'll meet you in the upcoming sessions with few more new topics. Until then, thank you all.